Okay, so VIX75, we are applying the same thing, same strategy. It's just that the way we now look at the market, obviously, is now advanced and everything. But we are still using the same concept that I've been telling you in Smart Confidence Trading 3.0. So looking to the left, swing low broken. That was a break of structure. This was my major lower low. From that major lower low, where was my major lower high? Was that one at the top. Okay. So from that major lower high, we drop. And as we are dropping, we look for a shift in internal structure that is going to be our what? Our lower low, right? So if you check here, internal structure was broken here. Internal structure was broken here, meaning this is now my lower low because it's lower than that one, right? After that shift in internal structure, having a lower low, how do you identify a lower high? The highest point that the market reached before it broke the low. Before breaking this swing low, which highest point did the market reach before it broke that low? Is this one. So that's my new lower high because it's lower than that one, right? Right. So after that, we came and broke. After this break of structure, we now want to identify a new lower low. How do I identify a new lower low? Same process. You follow market structure. As market structure was dropping, lower high, lower low, lower high, came to the same lower high here, lower low, broke the internal lower high. So after breaking that internal lower high, same way like this, after breaking internal lower high, it qualifies to be a lower low. This one is our new lower low. So once that one is our new lower low, this one was our new lower high. So the market was still in a bearish order flow overall, because this was not yet broken. But now after being broken like that, like this, it means the order flow is now bullish. When we're in a bullish order flow, we now expect the market to make higher highs and higher lows. So zooming in now to where the market is currently for VIX, you can actually see that after this change of character, breaking this lower high here, the market came here, right? After coming here and dropping, we can notice that we are in a range right now. What is a range? Range is simply the formation of same highs and same lows. Here, reject, 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 reject. That's same highs. Reject, 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 same lows. So for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, almost for the past 10 days, VIX has been ranging like this. So the best thing that I'm recommending you to do on VIX is simply wait for the breakout of that range. Where is it going to break out? If ever it breaks out to the upside, comes back to test this supply, it means on the supply we're going to sell. Why are we selling there? We are selling there for the fact that the market would have established a higher high. It would have established higher because it's higher than this. Once we now have a higher high, market must drop to establish a what? A higher low. A higher low, it's a low that is higher than this one. So that is what I'm simply expecting here. That is what I'm simply expecting. So I'm expecting it that range to break out to the upside and come back and tap into the supply zone, which is also an order block, before coming back down. So it going up here, how are retail traders going to be trapped who are not aware of what I'm telling you now? Once it breaks to the upside, they will think it's a support break and retest. Yet, so they'll buy. After buying like that, the market will tap there, drop, take them out here. After taking them out, what are they going to do? They will sell, and you'll discover that the market will also take them out again. So basically, the trick here is all about taking out the retail traders before the market goes on where it wants to go. But basically, this is how the institutions move. This is actually what I call institutional price cycle. Like, this is the whole cycle of institutions. If you check, there's no difference between what I was talking about on Crash 500. There's no difference to what I'm even going to show you on Boom 500, because the cycle is the same. The cycle is the same, but just applying on different markets. So VIX75, rather wait for the breakout of the range. Wait for the breakout of the range. Once you enter the supply, you can sell there nicely, targeting the bottom here, somewhere around this level. That's where I'm targeting the market to establish a what do you call a higher low, right around these levels. This was also a fair value gap. This is also another level here. That's a demand here. That's an order block, actually. This one is an order block. So in one of these levels, we are actually expecting. So even if we sell here, targeting here would have, even if this is our first target, this is a lot of money just from the here to here, because it's more than 1 day of holding that trade. So basically, those are the levels that I'm looking forward to hold the sales that we're going to sell before we continue buying, since we are now in a bullish order flow market on the daily. So this is what I'm seeing on VIX75. Wait for the breakout of the range, then you sell here on the supply, will drop all the way down. So just in case, if ever you want to, let's say someone who just wants to be inside the trade, let's see if ever we can get any confirmations on a lower time frame. If ever you get confirmations, yes, you can enter. For example, I saw this, I just saw this now, because I wasn't on the chart the whole weekend and even now. So after this internal change of character here, the market left a what? It left this demand, right? After leaving this demand, where was the entry? So after leaving this demand, we always, whatever happens, even if it goes up, whatever, we always expect it to come back into that demand, which is what it did here. Came back into the demand. This was an entry that we could have taken. This was a buy that one could have even taken. So now, where is this is the internal structure lower high. So what I'm now looking forward to now, if ever, let's say you want to enter earlier, let's say you want to enter the buy all the way to the supply that I saw on the daily. If ever you want to buy all the way up, then you sell down. It's also a choice. So that is the lower high. So after that lower high, where else am I expecting the market can drop? It can drop into this demand as well. If it comes into this demand, we can as well take buys there. We can as well take buys there. So what I'm simply expecting now is to break, once we break this lower high, internal structure lower high, it's a confirmation for bullish pressure. Once we come back into this demand or this fair value gap, there's a fair value gap and a demand, which is a double confluence. There you can buy as well. Buy there. Target, first target is this high here. This high that you're seeing here. That will be your first target. Second target is the supply that I showed you on the daily. So that is how you're going to enter. So the reason why I always tell you, you don't enter anywhere in the market, even if right now it's buying, you don't just buy anywhere in the air, because they are aware of people like that. People who just enter anywhere, they are aware of that. So the reason why they give these pullbacks, the reason why they do all those sort of things is to take out people like that. People who just enter in the air. So here is going to be your buy entry. Your buy entry target, you can target this high here with a minimum lot size that's $35. Minimum lot size that's $35, and you're risking $5. That's a minimum lot size. $5, one position. $5 stop loss. $35 the TP, first TP. That's a minimum lot size and one position. So meaning, depending on one's account size, if ever use a 0.005, that would be times 5, which is risking $25 to make $175 on one position. If ever it's one position and it's 0.005, you're risking $25 to make 175. So that would be your risk. Yeah, that would be your risk to reward, blah, blah, blah. So that would be the trade there. We are expecting the buy there. If ever we don't get the opportunity there, I don't know, but that's the opportunity that I'm looking forward to. According to experience, the market has to come back down there. It has to drop and come back all the way down there. So now I want to show you how these concepts that I have been teaching you, they are all confluencing each other. Whatever you want to use even your trend line. It will tell you, it will show you the same thing. So this is a trend line. Break, first time broke, never read, broke here now. So it coming back down, it's still the same thing with what I'm telling you now, whereby we break internal internal lower high and came back to retest them. It's a double confluence already. So you have a trend line break and retest. Number 2, you have a demand. Number 3, you have a fair value gap. Number 4, you have a what? A Fibonacci retracement. Already those are, so I'm expecting, so here let's wait for the market to break here. I think it's going to break. You know, when it breaks, I don't know whether it's going to turn here around. So if it turns around there, it means we're also going to have 78.6 as our Fibonacci retracement, which is also a good entry point as well. So all those, imagine four confluences already, and you can actually take this buy. This is a trade that you can actually take. So these trades, even if a signal is not given, you can actually take these trades nicely. No need to panic, no need to be even afraid. The market obeys laws, obeys principles. Once you know the laws and the principles, there's no need for you to be afraid, no need for you to shake. You just need to enter and let the market do its job. Don't panic out of trades, and also don't panic out of trades. That's one of the things that I've seen most people doing when they see the market moving in their favor. 1 2 1 2 1 2 3 candles, then they're out. That's not trading. You're still a gambler. To me, you're still a gambler. You're not trading because you're not sure of the principles that you're applying. You're not yet sure. You're not yet sure of what you're applying. It seems as if you're not yet sure of what you are really doing. So that is what I'll be expecting. A real trader is one who knows that the market is going to move from this point to that point, and they are willing to hold up until that point is reached. Even if it's not reached, at least you would have broken even or locked some profits, but not to come out of a trade, come out of a position out of fear to say it's going to oppose me. No, that's not trading. So this is what I'm looking forward to on VIX 75. Then if I have any question on VIX 75, you can ask in the chat. I'm now moving forward to Boom 500. Boom 500, Boom 500. So you see now that the institutional cycle in which the market moves is the same thing over and over again. If you check Boom 500, Crash 500, and VIX, they sort of like have a similar, I can say, I don't want really to say they're direct correlated, because most people, they will get me wrong. But there's a certain similarity. If you check, there's a certain similarity when it comes to the way they are moving. You check, this is the lower low, lower high. So as we're dropping, we want to establish the lower low, right? So here now we broke here. So where is my lower low? My lower low now is this low here at the bottom. This is my lower low because it's lower than this one. I don't have a lower high as yet. Which is what I'm expecting the market to boom and establish. So a lower high, I'm expecting to be established there. Why there? I have so many reasons why I'm saying there. Number one, these supply zones that were created here, they were actually retested. So no need to come back into them. This one retested. This one was also retested. So 1, 2, 3 supplies were retested. This one is the 4th one. This one, it was created but never retested. So now, if ever the market is going to come back up, I'm expecting it to come back all the way into this zone. Once it comes back into that zone, once it comes into this zone, that would be actually also a selling opportunity. These are now opportunities for, I think, next week, if not next week, but one. But I'm now showing you, I'm just showing you how we predict these things. I will do another video and actually show you guys what actually happened. These things, this is not guesswork. So here, after this change of character, right now, what I'm simply waiting for is a pullback now for me to enter the buys, because we are now in a bullish order flow. According to internal structure. So now, bullish order flow, it means I have this level here. I have this order block there, which was not tapped, which was not retested, which was not mitigated. And just above it, I have something like a double bottom. So a double bottom is a form of liquidity. It's a form of liquidity, which these institutions, they like to take out before they go wherever they want to go. So they usually take out those levels. That's why I never marked any level above there. So here, that's simply liquidity lying below there. liquidity. I'm simply referring to stop losses of retail traders. What do I mean? Retail traders, they have a support there. This is their support, meaning if the market comes into this support, retail traders, they are going to what? Buy. As they are buying, their stop loss they put below. As they put below, these institutions, they take out their stop loss by tapping into this order block, tapping into this order block. Because according to institutions now, this is the trick. This is the trick now. Retail traders, they are going to buy here, right? Because it's a support. Institutions, the big guys, the big players, the smart money guys, the market makers, whatever you want to call them, they are going to buy here. So how do you align yourself with the big players? By buying where they buy, sell where they buy, sell where they sell. Because if ever you align yourself with retail traders, because retail traders are not the market makers, retail traders are not the big players, retail traders are just a part of the puzzle. They're just a piece of the puzzle. So don't go where the retail traders are going, but actually go where the big players are going, because the big players are the ones that move price. Retail traders, they don't move price. Retail traders, they don't move price. Big players move price. So make sure you enter where big players enter. That's the advantage of this strategy that I'm showing you. Rarely do you find yourself being manipulated. Rarely are you manipulated, because it is the big players that manipulate people. So if ever you enter where they enter, who is going to manipulate you? Who is going to manipulate you? So in this case, what is going to happen is retail traders are going to sell, is they're going to buy on this support, because it's a support. As they buy, their stop losses are going to be taken out. As their stop losses are being taken out, this is what they're going to do. They'll think this is a support break and retest. As they think it's a support break and retest, they were going to sell. As they sell, they'll put their stop loss above, because it will now be a resistance. As they put their stop loss above, they're also going to be taken out as well. So they're going to be taken out in both ways. The stop losses of their buys, they are going to be taken out. As they sell and put their stop loss above, their stop loss are going to be taken out. So imagine now, this is to them they've achieved their goal as the big players. They've achieved what they wanted. So they could have established and have enough fuel now to go and push price where it must go. They will be having enough fuel now to go. So enough fuel, how do they get enough fuel? By taking out liquidity, like these stop losses of retail traders. When they are taken out, that's liquidity. That's fuel for the big players. As they take out this fuel, the retail traders, they are going to be it's a form of manipulation. They call it manipulation, the retail traders, but according to a big player, it's not even manipulation. It's simply them establishing and collecting fuel before they go where they must go. So a retail trader will look at this and say, hey, manipulation. Yes, it's not manipulation according to a big person perspective. So now, this is what I'm expecting. This is the move that I'm expecting. This is the major move. This one down here, it's a pullback. This is a pullback. Yes, you can, if ever you get confirmations, you can enter the pullback. It's fine. But the main move is this buy. The buy that is going to happen all the way up until we establish the lower high there. That is going to be also a very beautiful trade as well. So already I have shown you two beautiful trades, the crash 500 that we're expecting, the boom 500 that we're expecting, also the VIX I also showed you. So all of these instruments, I've showed you the expectations that we are having, and I've showed you the zones where we're buying and where we're expecting to buy, where we're expecting to sell. So even if a signal is not given and the market has approached the zone that we spoke about, there's no need for you to wait. Why wait? Because we discussed about this and we showed you all the confirmations, showed you all the confluences. No need to wait. So here, once it comes here and starts to boom, 0% can be your first target, negative 27 can be your second. I also have a resistance here, touch. It can also be my second target. My third target, which might be my final target, is there on this supply zone here. So this one also I'm going to hold for quite a number of days as well. It's also going to be a very beautiful swing trade for the boom 500 buy. So another point, if ever you really want to benefit the most out of swing trades, if ever you know that you don't want to be aggressive in the earlier entries, you can actually put conservative trades here in the beginning, right? Conservative trades, and as the market is moving, because it's a swing trade, it's going to be giving pullback. So when it will be pulling back there, you'll be entering and scaling in more positions, even though it's risky if ever you don't know where to scale in. If you don't know where to scale in, it's risky now. But also, someone who enters a very good lot size there, they also have an advantage as the market will be going up, because they can simply be shifting their stop loss higher. They can simply be shifting the stop loss higher and higher and higher and higher and higher and higher. That's also an advantage as well, because they may not even need to scale in anyway in between there, because they would have ended at a very good entry point there. So now this drop, as I said, is a pullback. One can go to lower time frames and look for confirmations if ever they want to take advantage of the sell that is happening. This sell on Boom 500, I want you to see the confluence that is there. Remember what I said on Crash 500. Remember what I showed you on Crash 500, how you could have taken advantage of that sell. I want you to see what is happening on Boom 500, why it's almost similar to what happened on Crash 500. Same move, we're going up, 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 up. This was the previous higher low. Previous higher low, when it's broken, that's our internal change of character. Once we have an internal change of character, we have to have a what? A pullback. Pullback. We have our Fibonacci 78.6. Beautiful. So if you check, Crash 500 did the same move. The same move, guys. Come on. The same move that Boom 500 did is the same move that Crash 500 did. The same move. This same move that I'm showing you here. The same thing that happened. The same thing that happened on Crash 500. That's why I said in the beginning, somewhere, somehow, there is some form of direct correlation. I don't want to really say that, because people, they might be confused now and buy when Crash 500 is buying, they buy Boom 500, and no, I'm not. Because if you just do that unwisely, you might get things wrongly. So, but you can see that you could have entered here, pull back after this internal change of character or internal shifting structure here. You wait for a pullback, 78.6. You could have also drawn, if ever you wanted here, you would have also drawn, for example, here, this one was a supply. Supply was broken, but it was never retested. If you check, it was never really retested. That's not the, so here it was broken, broke out, never really retested. So this one now, this is the retest into the supply, which is what we wanted. So change in character, internal character. Number 2, pull back into supply. Number 3, Fibonacci retracement. All those 3 confirmations were more than enough for you to enter this sell. Those are trades that I personally enter aggressive. When I enter aggressive, there, where is my stop loss? My stop loss is just above the supply candle here. The supply candle is this one. My stop loss will be just above it, like this. I can enter aggressive there, aggressive. As the market comes and breaks this previous low like this previous level like this, I can shift all my stop losses to break even, or even lock some profits inside here. That's how I trade. This is how we're making all this money that you see us making. So guys, it's very rare for you to get someone who is going to tell you the honest truth about how they are making their money, how they are doing all the people. They share information to a certain extent. That's the honest truth that I can tell you. People, they're always going to share information to a certain extent. Most of the people, they are never going to tell you everything. So Boom 500, I showed you the analysis, and I also showed you how you could have entered this sell here. Cash, let me just see. Right. So let's look for a level where the market can pull back into. Let's say it wants to pull back into. It can pull back into this supply, even though it was tapped. but that's the zone that I'm simply looking for. If ever it wants to pull back before continuing to go down. So even if it pulls back into that zone, someone can actually take their sales from there. You don't just enter sales here in between. That's how you are. That's how you always encounter losses. When you see the market, the train moving, then you just jump. No, 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 no. That's not. That's not how you trade. Wait for the market to pull back into a zone, then you enter. Pull back into a zone. Then, if you miss the trade, wait for it to pull back into the next zone, then you enter. So this is what I will be looking forward to. Pull back into there, then we drop all the way to the levels that I showed you on the daily. So the same move, this same move, same thing that happened on Crash. Watch this. Watch Crash 500. Same move, same check, same move. This was 30 minutes. We saw this break here according to 30 minutes. Same move, and the same move that I'm expecting on Crash 500 for it to pull back there before it dropping. It's the same move also that I'm also expecting on on Boom 500. Come on, guys. I don't know why people are not making money, especially you guys whom I'm always teaching, whom I'm always doing webinars, whom I'm always doing Zoom sessions. I don't know. If ever you're not making money, I don't know. I don't know. I don't know what's wrong with you. So this same move, after this internal break, pullback. We get the pullback. You wait for the pullback. Once it pulls back, we had Fibonacci, we had the fair value gap. All those were enough confluences for you to enter. Check how it dropped. Check how it dropped. All this money, all this money, all this money. So that you can actually see that it's the same thing on Boom. So the same thing that I'm expecting now, I'm expecting to go up, right? I'm expecting to go up, and we sell at a zone that I marked there. I marked the zone based on, was it 1 hour? I think it's 1 hour. Okay, 30 minutes, because on 30 minutes, I'm also seeing another level on 30 minutes. This is another level on 30 minutes, which can also be reached unto. Why that one? So let me just remove this a bit. Why that one, right? Let me put my Fibonacci and see what level is that. Point A to point B, 78.6. Wonderful. That level, it's a sniper one. That's a sniper level to sell. 78.6, 88%. Those are levels where you can enter hard, especially when you have all the confluences like this. So, two things here. It's now a choice. It's now a choice that you can choose. It's now a choice, a personal choice. Do you want to enter the buy as it is going up? It's a choice. It's a choice. It's now up to you. When you have the keys, it's now up to you. You just wait for the internal break here, internal change. Once you get the internal break, you get the pullback. Once you get the pullback, you can enter the buy. Even though, don't go aggressive on this buy. Why? The order flow, or this current order flow, it's a bearish order flow, right? When in a bearish order flow, it means the sellers are in control. So no need to be aggressive. You can enter conservatively, pull back, first target, second target. Once we reach there, once I get a rejection, 5 minutes, 15 minutes, once I get a rejection, I enter hard, my stop loss above. Those are opportunities that you can now enter hard, because this has confirmed that the order flow is now going down, of which this order flow going down, I showed you on the daily that is simply a pullback. It's simply a pullback that is happening. And that pullback, according to lower time frames, it will actually be a shift in order flow, right? So that is why I'm saying, if you're going to enter the buys, enter this one, you can enter conservatively. Then these sells, you can enter aggressively. If ever you want to enter aggressively, enter the sells aggressively, because the order flow is bearish. I hope I have made my point clear. conservative trade, conservative buy, aggressive sell. Conservative buy, aggressive sell. Boom, let's see. So VIX, I said it's consolidating, and I also showed you another area where you can actually buy if you ever want to be in the trade. And I also showed you another area where you can actually buy if ever. So remember what I said about boom 500 and crash 500. The way they have something like a similar way of movement. This is something that I didn't want to share. I didn't want to tell people, but you know, sometimes when you have a good heart, sometimes you don't have limits, you don't have boundaries of knowing when to stop now with the giving of that good heart. So I have a fair value gap in 15 minutes. It's a zone that can also be pulled back into. We marked another level based on 30 minutes. Let me return the level. Let's see. Around is it around this level? Yes, around this one. So on your setups, on your analysis, all these setups and analysis, I'm not going to share them on the WhatsApp group. I'm actually going to share them on the Discord, because the Discord, when someone joins the group, it helps them to see our previous works. So we are going to be using Discord more often from now going forward, because it helps even someone who joins for the first time to actually see what we've been doing all this while. Unlike WhatsApp, whereby the works that we've been doing for the past weeks, all these testimonials, all the screenshots, all the whatever we've been doing on WhatsApp, they can't access all of that, which is a disadvantage because they don't know what we've been doing. So that's why I'm advising you, let's be more active on that Discord, participate in that Discord, and also respond in that Discord. Let's work together and actually make sure that we make as much money as we can out of these markets, because the keys we have already. These are the keys that I'm actually giving you. These are the keys that I'm actually giving you. So guys, that is it. Boom 500, I did the analysis. Crash 500, I also did the analysis. VIX, I also did the analysis. So right now, the current trade that one can enter can be a conservative buy, wait for the break of this internal, wait for the break and retest. You can enter a conservative buy, right? We take it all the way to the top before we drop. The VIX as well, I also showed you what you can actually also do now. So VIX as well, we have trend line. Once it comes back into our demand, which is also close to a fair value gap, the demand here is the last bearish candle before the bullish push, which is this one, right? So I have a demand here and I also have a fair value gap. So what I usually do when I have two zones like that, I can mark the fair value gap like this. But when I enter the trade, my stop loss will be below the what? The demand. So even if I enter here, my stop loss now will be below this demand here, which is around, yeah. So just in case, that one, it will be just in case it taps into the fair value gap and goes and doesn't tap into this demand. So it's just an in case scenario. But so far, that would be the expectation. So even if it comes here and actually also enters into the demand, it's also an advantage because you can actually scale in more buys, your stop loss, because it's still the same, just below the demand like that. So either there or here, one can actually buy. But me, I'll start buying as soon as it touches. This is also a trade that is actually going to happen in the next 2 hours, 3 hours. I don't know how long it's going to take, because this is 30 minutes. So this trade, I've done the analysis and everything like this. You don't need to wait for a signal, guys. You don't need to wait for a signal. When the analysis has been done, when all the analysis has been done, You don't need to wait for a signal, man. Waiting for a signal, that's the last option that must be in your mind. That's the last option that must be in your mind. These are the keys. I'm giving you the keys. I'm showing you the way. This is how we trade, man. This one I'm going to show you. This one I'm going to catch it. I'm going to catch it and I'm going to show you. If you don't catch it, I don't know. So personally, sometimes there are nights that I don't usually sleep. Or even if I sleep, I'll be waking up maybe after an hour or 2 hours, checking is the market tapped into my zone. Yes, because sometimes I can put a pending order, a small lot size pending order around the zone here. So that when it's reached, I'll just be checking my phone here and there. When it's reached, I know that the market is now on my zone and I'll just enter my positions. So that's what you can also do. You can put a small lot size pending order so that when the market comes there, you actually see by the pending order when it's triggered, you know that the market is tapped into your zone. Then you just enter other trades. Then you just hold all the way. Guys, this is how we make money. This is how money is being made every single day, over and over and over and over and over and over again. So guys, I hope you are going to catch all these opportunities. I'm not that the reason why I don't analyze 10 instruments,